Hello, and welcome to Navigating Seasonal Cycles with Jake Bernstein. The information provided in this episode is for educational purposes only. There is a risk of loss in all trading and investing. The results shown are hypothetical and should not be construed as investment advice. And now, over to you, Jake.
Greetings, everyone. Jake Bernstein. Thanks for coming here to listen to me talk about cycles and timing. Primarily today, we're going to talk about seasonal cycles, which I've been doing for the last number of sessions because it's my passion, because it has made me good money. I shouldn't say good money, it's made me great money. And it's easy to talk about because it's so specific. One of the good things about cycles is that they are cycles that repeat. But within that process of repetition is a lot of frustration because people expect more from cycles than what cycles can give. After all, a 22,000-year cycle can be off by 5,000 or 6,000 years, and certainly no one's going to live that long to see what happens. What's frustrating is when you expect a cycle, for example, that's been 32 days, and it runs 27 days, or perhaps 36 days, or doesn't come at all. That's not only frustrating, but sometimes it's costly as well. So we need to put perspective in the term cycle and ask the question, what is a cycle in terms of pragmatics and in terms of academics? In terms of academics, it's for the mathematician. It's for the individuals who know how to combine different cycle lengths and put them together, as Richard has done with Lars. For me, I need a cycle to be more precise, more specific. So within the broader context of things, I always look at setup, trigger, and follow-through as my approach to trading. And within that three-part approach, the setup is the cycle part. It's the pattern part. It's the part that finds patterns so that we can time them and use them effectively. The timing compensates for the lack of accuracy in some cycles, but it does not change the beauty of the cycle. But I want to emphasize, since I did my first investing with cycles in 1972, I've become more pragmatic about cycles. I'm not an academic. I want to use cycles for the purpose of making profits and or for the purpose of bettering the existence of humankind. For example, planting crops, maximizing procedures using patterns and cycles and so forth is my real interest ultimately. But I would have to say also that since I discovered the real estate cycle 17 to 18 years through the work of the foundation, every piece of real estate that I've bought and sold has been profitable, and I'm very thankful for that. And so in the process of giving back to the foundation, I want to make sure that you understand I'm doing this for your sake, to help you be better at what you're doing, and for my sake, to help me feel like I've given something back. I'm going to show you a process today, which you can make your own. Accept, reject, try, see if it works for you, all in the hope that someone somewhere will send me an email and say, Jake, you changed my life for the better. You changed my trading for the better. You changed my investing for the better. That's what it's all about for me in my old age. It's all about sharing to indicate that I really appreciate what the foundation has done for me and hope it can do the same for you, or even better. So the process that I'm going to show you today, which I've done before, is a seasonal process. I want to emphasize that you can do this process on any application that provides you specific seasonal trades by date, because what we're doing here is honing our skills, zooming in our particular situation. If you recall, a number of times I've shown seasonal charts. Let me show you what I mean. I'm going to go to stock seasonal charts, like so. I'm going to select seasonal chart for S&P. So I'm going to do it like so. I'm going to come down to S&P and acquaint you with the seasonal composite chart. Let me show it to you. I'm sure if you've seen my work before, you remember this chart. Maybe you love it, maybe you hate it. But I think by the end of the year, if you don't already love it, you will. So let's go to S&P, like so. And I have pulled up on the screen here a chart of S&P index, S&P 500, covering the period of time from 1960 to 2025, a vast amount of time. And remember, this chart does not show any one year. It is a composite chart. It shows all of the years combined and normalized. So by a mathematical process, a very simple process, I've converted each individual year of S&P to 100 at the high and 0 at the low. So no one particular year, or 2 or 3 or 5 or 10 years, has an impact on the trend of this chart. This is the underlying trend, exclusive of any particular year. I call it the market DNA, for lack of a better term. And so when we look at the chart, we find where we are right now. Let me lower this chart just a little bit here. And pardon the voice of an old man. Here is where we are located right now, at the beginning of November, right here. In the boxes at the bottom of the screen, you see the percentage of time up or down. The arrow is marking statistically significant weeks. The number beneath the arrow indicating the percentage of time up compared to the previous week. So this is where we find ourselves now. And indeed, the market is at new all-time highs or close to it. So it's conforming to the seasonality quite well, which strongly suggests that the next 2 months will continue to follow this pattern, that they should be bullish, and that history repeating S&P should conform to this chart by the end of the year. So what we're going to do today is zoom in on this period of time, find opportunities using seasonal cycles that are more specific. So we can go from this level of information, which is a global level, to a closer in level, as if we were a spy satellite up in the sky. We see this picture and then we zoom in on this picture. We're going to do that by doing a search. And I want to stress here, what I'm showing you is grossly imperfect. It will never be perfect, but it will give you an opportunity to apply risk management and timing tools to a process that is based on repetition and cycles. And therein lies its beauty. Its beauty being that it is not perfect, but it is very functional and will give you an edge, not only in trading, but perhaps even in life, if you understand the process of setup, trigger, and follow through. So I'm going to go here to seasonal trades. And I'm going to go to US stock trades, like so. And as you can see on the left, I have a series of stocks. In fact, there are all S&P 500 stocks are on this list. I'm going to randomly select, and this is not rehearsed or scripted in any way, shape, or form, the first stock right here. And I'm going to ask the question. And remember, garbage in, garbage out. I'm going to ask a valid question. For the month of November, in the stock 3M, has there been any seasonal pattern that's been profitable 75% of the time, has required less than 5% risk, and has been relatively short term? And for me, short term would be 25 days. So these are my parameters. Looking at this combination, The computer will go through literally trillions of probabilities, trillions of combinations and iterations, and ask the question, has it found anything like this? Does anything like this exist? Buying 3M on a certain date, getting out on a certain date, risking 5% with a 75% probability of success in the past. And remember, we are not predicting the future. We're simply seeing what has happened in the past, making an assumption that the future will repeat if there's a trigger, which is the second part of my equation, timing. So I'm going to do a search. Computer says there is one thing that meets your criteria, November 1st through November the 5th. Well, the 5th is gone. It's in the history books. I'm not sure how it turned out, but I'm pretty sure that if there was a trigger, we took the trade. If there was no trigger, we didn't take the trade. So let's go back to the search. Like so. And remember, I'm looking for trades in 3M. I'm going to abandon 3M now. And using AI, there's a much faster way to do this, but I want to show you the details. So let's go back. Search, go to Abbott. And it's the same question. As I said before, it's a slow process manually this way, but I want to show you the pieces of the puzzle and how they fit together. And then, if we find something, we're going to save it and come back in December and ask the question, did it work? Did it make money? Was it profitable? Did the cycle repeat? So here's Abbott. And it says no, nothing for Abbott. No problem. Let's go back. And let's look at a few more. In fact, let's do this. Let's give it a bigger task. After all, it's just a stupid computer. Empty, Accenture, Adobe, and Advanced Micro. There's search for 4 at a time. Make the job a little bit faster. Same criteria. Anything, if it's there, it will find it. And remember, we are not data mining for things that aren't there. We are data mining for things that are there. We just have to find them. So we have to uncover these gems and then time them. So let's take a look. Search. And my goodness, do we have a lot of stuff. You've got 8 pages. The computer has sorted these out from highest probability to lowest probability. So the computer claims that buying AbbVie November 20th end of day, getting out December the 12th end of day with 3% risk has been right 91% of the time. Well, that's suspicious immediately. So the first thing I want to do is look at history, like so. And here's the history. Now, no wonder there's a very limited amount of data here. So even though it has been right every year except I think once, it's a gamble because remember, the job of a statistician is to find opportunities that are statistically reliable, not just potentially anomalies. So I'm going to go back here, like so. I'm going to say, I reject all the trades in AbbVie. They just don't have sufficient history. Remember, we could do this up front, using AI, but right now I want to show you the slow and steady process. We're going to get rid of AbbVie and repeat the search for these 3 stocks. Let's do that again, right here. Okay, here we go. Accenture. It's got a beautiful history, November 25th through December the 2nd, with 87% probability and a whole bunch of other statistics. Point of information. No matter what process you're using to find your seasonal or cyclical trades, make sure there's sufficient history behind them. Make sure you can get all the statistics that are relevant. Percent win, percent loss, average percent win, average percent loss, upswing, downswing, and make sure you can see the entire history as we're going to do right now. And we've got 24 years of history. Now, 24 years of history is fine. It doesn't give me the warm fuzzies. I'd like to see 40 or 50 years. I'd like to see 60 years. I want to see as many as I can. But unfortunately, in this case, this is all the data we have, but it's quite respectable. So let's do this. Let's go back to our previous screen right here and make note of the first trade, Accenture, right over here. I'm going to save this trade by creating a folder and call it FSC. After all, what good is doing a bunch of research if you're not going to save your research? So we're going to add the folder like so. I'm going to bring the folder up over here and save this trade. I'm done with Accenture. I'm going to repeat the process now. Not have to repeat it on Accenture. Save a little bit of time. We're doing this nice and slow so you'll understand what I'm doing here. Then we're going to look at it again in December and ask the question, did it trigger? How did it turn out? Did it make money? Did it lose money? And so forth. Okay, so let's go here and repeat the search. Nothing in Adobe. That's fine. Remember, zero information is good because it will tell you not to waste your time. So let's do this. Remember, I'm dealing with a massive database here, and AI will make that job much easier because it will do most of this heavy lifting for me. So let's get rid of Adobe. Let's keep Advanced Micro. Let's keep Aflac. And let's add Agilent to it. And let's repeat the search. If I'm boring you, I'm sorry, but this is how I make money. And it works extremely well and has done so for many years. So there's nothing here. That's fine, no problem. Let's clear the transactions out. And just to show you that I'm not biased, I'm going to clear the selection. I'm going to go to the end of the alphabet. So let's do that. The criteria that you put in here is entirely up to you. It's a question of what you're willing to risk and how much security you want in the way of accuracy. So here we go. And we're going to search again and see what we find at the end of the alphabet. Okay, here we go. Yum Brands at 78% accuracy. And the reason it's in the first position is the computer looked at all the trades, 7 pages of them, and put the one with the highest accuracy, the highest percent win in the first position. So this will be the best trade from that perspective. But you'll notice November 2nd through the 6th has already come and gone. So what about the 2nd through the 13th? Well, these trades are already in process, already gone. So I'm not going to waste my time with them. I'm going to go back like so. I'm going to get rid of Yum. Repeat the search. Remember these criteria, entirely up to you. Depends on what risk you want to take, how long you want to be in a trade. Again, user defined. So let's do a search. Now we have Zimmer Holdings at the top of our list with 79% win. Let's look at the history. It's November 20th to December the 9th, so it's coming up at the end of the month. Let's call it the Thanksgiving trade. Here's the history. 24 years of history, that's good. Let's look at the performance statistics at the bottom of the screen. Not bad at all. So these are the losing years. These are the winning years on top. So now we've got a trade Let's go back to the screen and save that trade. Let's go down the list. We've got Zoetis as the next one. And the first one in Zoetis is an 83% trade right over here. Let's see if we got enough history. According to this, we don't have enough history. That's what the NA means. So we're going to come back and get rid of Zoetis and repeat the search. Go back and do Zebra. Zebra's been around for a long time. Let's see if there's any trades in Zebra. By the way, we can also do this for futures. Anything in Zebra? No, nothing there. As I said, information that there's nothing there is just as good as information that there is something there. Because you know there's nothing you want to do in that particular stock in the month of November with high odds. So let's do a random search here. Go toward the middle of the list, like so. Let's go here. Okay, these are all stocks that we know. Kimberly-Clark. So let's look at that one. KLAC, KLA-Tencor. Let's look at Kroger. Let's look at L3 Harris. So we've got some big names here. Let's do a search. So we're going to search these four. Same parameters. 75% win. Stop loss 5%, close only. Days in trade 25 or less. Let's do a search. All right, Kimberly-Clark, been around for a long time. 82% probability, that's a great number. Let's look at the history. 41 years of history, beautiful trade. Let's see what it looks like. And again, if your program, whatever it is, whether it's a seasonal program, or just a regular timing program, doesn't give you the kind of historical information that you need in order to make a decision, such as percent win, average profit, average loss, then you're not going to make money because you'd be wondering if it's a valid program or not. So here's a very beautiful history. It's not making as much money each year as it has in the past, but it is a viable trade. So I'm going to go back screen like so. And I'm going to save the Kimberly-Clark. Let me show you one more thing. How does it conform, the trade that we picked? How does it conform to the seasonal chart we looked at the start of our session? Let's take a look. The individual seasonal chart for this particular trade. The little period in yellow is the time that we're in this trade. I want you to look at this area right over here after the trade is over. Does it continue higher? Yes, it does, with high probability of success. This is a very good trade, no matter how it turns out. It has been an excellent trade in the past because it's shown a strong tendency to continue moving higher after the official dates for this trade are over, which are the dates that we just found. So remember that. It's only a 5-day trade. We're going to come back and revisit at some point in the future. Let's repeat the process. Return to search. Let's get rid of Kimberly. Kroger, L3 Harris, and KLA, all sizable stocks. It says nothing meets our criteria. That's great. Because remember, we don't want to make too many decisions. We just want to make a few good ones. And this is how we find those decisions. So let's do one more, and then you'll be rid of me. Let's look at Netflix. Rubbermaid. And see what we've got. Remember the same criteria. 75, 5% risk, and 25 days or less in the trade. Search. Nothing. Well, that's very good to know. Let's go back. Let's clear our selection. And remember, the process that I'm showing you right now is perfect for AI. Right now, it's a laborious task. We have it automated, but it will not run as fast as it will under AI. So let's go back here and let's pick another one. How about cat? Big stock, been around for a long time. And cardinal health, big cat, cardinal health. And let's do big capital one as well. And the good old standby, Campbell's soup. And let's see what we got. Remember what I said. Few choices are better than too many. Okay, we've got Campbell's. First trade right over here. Let's look at the history. See if I have sufficient history. I've got 40 years of history. I've got the history on every one of these trades and performance. Now this over here is a little suspicious. It looks like a data error to me. It would still be a winning trade, but not to the same magnitude. I will check that error, but I will save the trade. And let's go to the next trade. Cardinal health. Let's look at it. And what am I looking for? Well, in the previous trade, I wasn't looking for anything specific, but I did find a mistake, which is very important. So let's go through this. Again, very nice growth curve. Doesn't look like any mistakes on this one. We've got 37 years of history, so it's very acceptable. I'm going to save the cardinal health trade. Like so. And then we'll do the caterpillar trade. Save this guy. And let's go to cat. Pick the first trade on cat. And it should have a nice long history. 55 years. Show me who in this business is willing to show you 55 years of history. They won't even show you 10 because they don't even have it. This is the beauty of doing historical research. November 20th or November 25th, very short-term trade. And here's the history. It looks normal to me, I don't see any particular errors. I might want to check this one right here. But in any event, it's a trade I'm going to save. And do notice, these are all short-term trades. Before we end, let's look at the seasonal and caterpillar. How does it conform to the big picture season, which I showed at the beginning of this session? Let's see. Showing in yellow. And the question is, what does it do afterwards? According to the screen, it comes down briefly after the trade is over, but then rallies again toward the end of the year. So chances are we could find a trade here in December as well. Let me show you what I mean. I'm going to go back to the search, like so. I'm going to select the month of December now. Same criteria. I'm going to repeat the process for cat. Is there a trade for cat? No, it doesn't meet our criteria. Therefore, it did not show up on the search. Remember, we searched for 75% win. So it's basically saying trade with those credentials is not available. Let me show you something interesting. Let's go back to the search and change the criteria. I'm going to change it to a lower expectation, 70%. which most people would be very happy to achieve 70%. But I'm not. I want more than 70. I want more than 75. Let's go back to the search, like so. And we find cat. Camel soups. Let's go to page 2. Now, why is it giving me all these possibilities? Very simple. Because it's doing what I asked. It's showing me all the possibilities that I asked for. And there's cat right at the bottom. Let me show it to you. Here's the caterpillar trade. On December 22nd through December 25th, 27th, with 70% win. So you can see what happened when we lower our expectations. And let's look at the history. 55 years of history. Very nice equity curve. Looking very strong. This is an extremely good trade and I will save it, even though the accuracy is not what I want. Why will I do that? I'll tell you why. Because remember, this is only step 1 of the process. We have 2 more steps, the most important of which is the next step, which is the trigger. I will show you that as the time approaches. Just remember, we found trades for November, we found trades for December. We're going to look at them in the future and see how they turned out. Remember also that no matter what we found, it requires a trigger. In the next session, which I will do for you if they ask me to come back, I'll show you a trigger or 2 that you can use to help you make a decision. But in the meantime, before I forget, because at my age, you never know what's going to happen. Here we go. Save the cat trade, like so. So, to review for you what we did today, we looked at a seasonal process to find repetitive trades using seasonal cycles. We did everything by the numbers. We did not use any opinions. We did not interpret any special angles. We did not interpret the news. We didn't talk about earnings. We didn't talk about the economy. We didn't talk about anything except the trade, its history, and the process that we use. Let's see how things turn out. And remember, the cycle by itself, for me, is insufficient to make an investment or a trading decision. That decision can only be made by following a process of setup, trigger, and follow through. Thank you for your attention. If you have questions for me, you can write me at the foundation, or you can write me at my email address, rulesbasedtrader, that's RULESBASEDTRADER @gmail.com. Thank you, Foundation, for the opportunity to teach.